Hello, very good morning to all. I'm Kelvin here again. Welcome to today's Daily Dose of Market Insights. Very good morning. Today will be Wednesday, the 11th of December 2024. So before we start our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, before we jump straight into the details of today's intraday technical outlook on the broad-based cross-asset classes, let's have a recap what has taken shape yesterday in terms of economic data releases, news flow, and the respective cross-asset classes intraday movement. So let us start with the key news flow and event that has taken shape yesterday first. So we know that yesterday the key event is more pertaining to the FX market, particularly on the Aussie dollar, where we have RBA interest rate decision. So this RBA interest rate decision is quite pivotal. Why? Because we know that RBA, the Australia Central Bank, is the only sole developed nation central bank, asset bank of Japan, that has not cut its policy interest rate. All right, so it keep its policy interest rate at decades high, and yesterday without much fanfare, it also maintained its policy rate unchanged. That what its market is expecting at 4.35%. Okay, let me expand my screen so that you guys could have a better look at it. All right, so but what's interesting is 1 hour thereafter, during the press conference of Governor Michelle Bullock, so this is where she is. So she has started to change her rhetoric from previously in the last 4 to 5 meetings where she staunchly maintained her hawkish composure, stating that Australia's services inflation remains elevated. But yesterday she changed her tone, indicating that RBA now is gaining more confidence on its fights against inflation, and she sounded less hawkish, which represented that the next potential meeting there could be an interest rate cut in Australia. So that actually represents a downside pressure on the Aussie dollar. So that doesn't come as a surprise because the technicals has really been reflecting this Aussie dollar weakness. So the Aussie dollar yesterday continues to actually inch downwards since the failure to actually break above a proper break above the 50-day and the 20-day moving average since 8th of October this year. So the Australian dollar yesterday almost lost 1%, to be precise, negative 0.97%. That means weaken further against the US dollar. And what's most interesting over here is that as you are speaking right now, it's about to test again the key major support zone of 0.360. So right now it's trading at 0.3681. Yesterday's US session intraday low was 0.6365. Okay, just 5 pips away from the 0.6360 key major support level. So why this major support level is key, for those who followed my daily dose on a frequent basis, I've been emphasizing this level over and over again. But for those who are new, not worry, stay on hold. I will cover that when we cover the intraday technical outlook segment thereafter, right, in the daily dose. So the next particular daily dose I want to share, market, what I call it, news flow related, is more pertaining to oil. All right, over here. So what I did over here is that the current Biden administration now is actually pondering new Russian oil sanctions ahead of the incoming Trump's administration. So that actually saw oil prices rose during the Asia session right now as we are speaking. So oil price, if you look at the West Texas crude oil over here, in fact, it actually rose by 0.7%, if I'm not wrong. Let's have a quick recap. But yes, so oil prices rose by West Texas crude 0.78%, hovering above that 67 US dollar per barrel, which is a kind of a key short-term support that we highlighted at the start of this week. All right, so later I'll touch on the key levels to watch out for today on the West Texas crude oil on the intraday basis, and as well as its intraday trend bias as well. All right, so what's interesting over here is now let's talk about the movement of the US major benchmark stock indices. So the major benchmark US stock indices continues to actually shape that minor corrective pullback that we highlighted the risk yesterday due to the intermarket dynamics, or the intermarket dynamics of the market breadth of the S&P 500 and the Nasdaq 100, using the percentage of S&P 500 stocks and percentage of Nasdaq 100 stocks holding above their respective 20-day and the 50-day moving averages that I already covered in yesterday's daily dose intermarket segment. For those who miss it, you can actually take a look at it in our OANDA Asia Pacific YouTube channel, which I uploaded yesterday's daily dose into that channel, where I covered very in detail the intermarket dynamics segment on the US stock market, why there is a growing risk of a potential multi-week corrective pullback that may start to unfold in the US benchmark stock indices. So yesterday, the weakness continues as expected on the major US stock indices. All the four major US stock indices closed in the red. The SPX negative 0.3, the Nasdaq 0.34, the Dow Jones Industrial Average at the same magnitude negative 0.35, and the Russell 2000 slightly underperformed with a loss of negative 0.42%. And this particular fall in the we call it US major stock indices also pretty much also in line with another key upcoming risk data that is taking shape today in today's economic calendar, which is the release of the US CPI data. We'll touch more about that later towards the end of today's daily dose. All right, and what's interesting for here is that due to this heightened tit-for-tat measures where US and China potential trade war, tech war, raw materials war that could play out in 2025 over the last few days of news flow, which is highlighted as well. Gold managed to actually rose further within our expectation after the break of that key short-term pivotal range resistance of 2066 on Tuesday itself. All right, so gold price continues to add on to gains for I think now is the third consecutive session, if not wrong. Looking now at 2,700 psychological level, and in Asia session it added on 0.2%. All right, and one more particular news flow to highlight is more pertaining to the China stock market and as well as its proxy, the Hang Seng stock indices, where China today kickstart this two-day closed door meeting on stretch. It's a closed door meeting discussing it's an annual economic meeting. The actual meeting name is called Central Economic Work Conference, and this is only attended by Tier 1 China top policy makers, not the Tier 2 or Tier 3. And it's a closed door meeting ending on Thursday, and it will focus on setting the economic agenda for 2025. All right, so but nevertheless, we know that China policymakers tends to indirectly leak out whatever things that they deem desired to boost animal spirits or consumer confidence in the Chinese economy. And on top of that, do not forget, next year we also do have a much more frosty relationship between US and China, given Trump's potentially higher trade tariffs towards China products heading into US. So do look out for any potential local press news leak on Thursday. And what's interesting over here is that the market has really reacted to that. And as we are speaking right now, the Hang Seng indices, let me put it up. Right, the Hang Seng indices trying to actually recover from yesterday loss itself, and whereas the China CSI 300 try to actually inch up minor gains, but the smaller cap is actually making a percent. This one, the CSI 300, this CSI 1000 index, which comprises more of a small to mid cap China A shares, is now inching up higher by 1%. All right, so later I'll touch on the intraday technical outlook and the key levels to watch on the Hong Kong 33. So that is the Hang Seng CFD in OANDA's platform. All right, so these are the key data, news flow, and as well as the respective intraday performance on the respective broad-based cross asset classes that I shared with you guys. All right, so now let us now focus our attention on the FX market, on the intraday technical outlook on the FX market. So before I jump straight into the euro dollar, let's have a step back and look at the bigger picture first on the dollar index. All right, over here. So if you look at the dollar index, right, we know that the dollar index comprises a heavy weightage in the euro. The euro has a heavy weightage in the dollar index, pardon me, has continues to stage 3 days of consecutive rebound, 1, 2, 3, since the retest of this key intermediate support level at 105.48. So why this 105.48 very important? Because this was the previous gray line here. So look at this descending gray line. This descending gray line is in fact a upper limit of a former symmetrical triangle range configuration that was previously in place since 5th of October, broken out on 12th of November, reinforced by the incoming Trump administration American First policy that is potentially supporting further dollar strength going forward, did a pullback and retested on last Friday. And last Friday is important. Why? Because last Friday was actually the release of a key US economic data, which is the NFP data. And thereafter, the price action starts to stage 3 consecutive day of rebound. Right, indicating that the dollar weakness pullback may have already ended, and we may start to see a continuation of that potential impulsive up move sequence in the US dollar index. That means, i.e., dollar strength coming back into the FX market in general. All right, in general, and also being supported by the 10-year US Treasury yield as well, and the 2-year. So let's start with the 2-year first. The 2-year US Treasury yield also managed to bounce off for 1, 2, 3 consecutive sessions at a key intermediate support level after that pullback exposed Trump winning the White House. All right, and where it pulled back right exactly at 4.09%, which is a key intermediate graphical support level. Previously former swing high of 15th of August and 10th of October turned into a pullback support, as well as the rising 50-day moving average as well. So that's the 2-year. And if you look at the longer tenure, the 10-year, pardon me, over here, okay, we also starts to see the push up from a key intermediate support level at 4.15%, and right now price action managed to reintegrate back above the 200-day and the 50-day moving average. So net overall, with this rising US 2-year Treasury yield and 10-year Treasury yield, from a intermarket perspective, it also support the US dollar index bullish reversal scenario, which I highlighted earlier on its inherent positive technical elements. All right, so net overall, potentially we could potentially start to see the we call it the resurgence of dollar strength coming back into the picture, and that explains why the euro dollar was weaker slightly further yesterday. All right, so now back to the individual technical chart of the euro dollar on an hourly basis. So let me expand my screen so that you guys could have a better visualization on the charts. All right, so for the euro dollar over here, what we could see is that we starts to actually break down below the 20-day moving average, which is at the 1.053 level. And because of that price action don't go vertical down, it oscillates within trends. And based on the oscillator, or the RSI oscillator indicator, have really hit the oversold region at the start of yesterday's mid-US session yesterday. Then thereafter, it tried to work out from the oversold condition by staging a bounce, and that also starts to see a slight minor bounce on the euro dollar back towards the breakdown line, and the 20-day moving average now acting as an intermediate resistance at 1.0543. All right, to be precise, 1.0543. So instead of using 1.0543 as my Titan short-term pivotal resistance level, because bear in mind today we do have a key US economic data, which is the US CPI data, that could actually see increased jump in intraday volatility. So I do not want to actually put it so tight, just in case you have the whipsaw above 1.0540 before, then I will still maintain that 1.06, a very clear key resistance overhead level, which is my short-term pivotal resistance level since late last week. So still using 1.06 figure level as my short-term pivotal resistance level due to the heightened potential whipsaw that could take place upon the release of the US CPI thereafter. So 1.06 figure short-term pivotal resistance, no change. Still maintain that intraday bearish bias on the euro dollar, which is support level to watch for today on the intraday basis, 1.0460. All right. However, if I start to see a push up above 1.06 figure and hourly close above it, that would invalidate today's intraday bearish bias. Pardon me. Let me repeat again. That would invalidate today's intraday bearish bias to see a squeeze up or the continuation of the mean reversion rebound scenario extending towards the next intermediate resistance zone of 1.0660/1.0680. Above it, potentially sees a further push up towards 1.0770, which is the minor congestion area of 7th of November and 8th of November. So that's for the euro dollar. Sterling dollar unchanged, continues to be trapped within this neutrality stance that we have since Monday. So still maintain that neutrality range between neutrality stance between these two range of 1.2810 and 1.2690. All right. So now turning our attention will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So the Aussie dollar right now, okay, it managed to actually stage a bounce, coming very close to the key major support level of 63.60. So why this level is important? Because if we to look at the situation right here, right now, right, this 63.60 is in fact the lower limit of this major support zone. Why is it important? Because previously at the low of 5th of August 2024, which is so very close to 63.60, price touched the low and thereafter staged a multi-week corrective bounce within its major sideways complex zone that is still in place about a year ago. 19th of April, similar as well, hit 63.60, staged a multi-week rebound, and similarly as well on 26th of October to not 26th of October, sorry, 14th of November last year, staged a multi-week rebound. All right, over here. Okay, so what I could see over here is that 63.60 is the major support zone of this ongoing complex major sideways range configuration that is in place since 13th of October 2023 low. So if we have a daily close and better still a weekly close, especially a weekly close below 63.60, that could potential unleash a multi-week to multi-month impulsive downward sequence on the Aussie dollar. But nevertheless, we also could still see at least some form of minor rebound coming into play if price action managed to actually help right exactly at 63.60 and starts to form a potential bullish daily candlestick. All right, so we should continue to monitor as price action trying to actually hover or retest the 63.60 key major support level. So now what's in store for the intraday basis, okay, on the Aussie dollar. All right, so on the Aussie dollar, what we could see over here is that on the intraday basis, we start to see signs of a bullish divergence on the hourly RSI. A bullish divergence over here. Price action stage lower low, but the RSI starts to shape a higher lower after hitting the oversold region yesterday. All right, during the European session. All right, this is over here, oversold. Okay, and there's a bullish divergence that's being flashed out. So with this bullish divergence that's being flashed out over here, there could be potentials, we call it potential scenario. Oops, where is the, okay, sorry, my apologies. Okay, let me expand it. There could be potential scenario of at least an intraday minor bounce taking shape on the Aussie dollar. So with that, I'll be using 63.60 as my short-term pivotal, 63.60 here as my short-term pivotal support level for this potential minor intraday mean reversion bounce that could potentially play out. So I will flip to a intraday bullish bias, but bear in mind this is only a potential minor bounce. the short-term trend and the medium-term trend is still much more skewed towards the downside rather than the upside. All right, so 63.60 short-term pivotal support flip to a intraday bullish bias for only a potential intraday minor bounce scenario within a short and medium-term downtrend that could potentially be still intact. Two resistance to watch on the intraday basis: 64 figure level followed by 64.35 over here. Okay. 64.35. Okay, so what's this 64.35? If you do the Fibo retracement of that current push down, it's close to the golden ratio of 61.8%, and also the upper limit of this minor descending channel that is in place since 29th of November 2000 minus November 2024 minus swing high. All right, so potentially if the price action starts to really move up so fast and hit at 64.35 ahead of the US CPI data, then the bullish potential may already have been played out, and I will be looking at 64.35 here for any signs of exhaustion, in bullish exhaustion in terms of the bearish candlestick that could take shape during and or before the before or after the key release of the US CPI data, to potentially there could be bearish reassertion back into the Aussie dollar. All right, so I hope that this could be as clear as possible. All right, so with that, because it's very close to that 63.60, so we will flip to an intraday bullish bias, but for only a potential minor bounce within the short term and medium term downtrend phase that is still intact. Two key intermediate resistance level to watch on the intraday basis will be 64 figure followed by 64.35. But thereafter, if price action managed to actually collapse with hourly close below 63.60, then the bearish pressure will reinsert itself on the Aussie dollar to expose the next near-term support zone at 63 figures slash 62.85 next. All right, so what's this 63 figures slash 62.85 next? In fact, the minor swing low area of last October, right over here, 4th of October to 26th of October 2023. Okay, so that's sum up the intraday technical outlook on the Aussie dollar. All right, okay. Now turning our attention will be the dollar yen. All right, so dollar yen is quite nasty. So what I could see over here is that it's going to push up, invalidate our short-term bearish bias by breaking above the 51.60, 51.50 level, but got rejected at the 200-day moving average, and as well as very close to the upper limit of this minor descending channel resistance that is in place since 15th of November. So with that, then we have a bearish divergence that's going to play out on the hourly RSI. So given that the dollar strength is coming back in general by looking at the US dollar index and the potential for the push up or the bullish reversal scenario that could take shape in the 10-year and the 2-year US Treasury yield, we will be more cautious on the dollar yen. So we will flip to a neutrality stance for today on the dollar yen between 151.90 slash 152.15, which was actually rejected yesterday, and the 200-day moving average. Lower limit will be 150.70. All right. So if price action managed to actually break out either of these two neutrality level, so if we start to see hourly close above 52.15, then potentially this up move may extend further to expose the next intermediate resistance level at 153.30 slash 153.70 level. All right, so this level, if it constitutes with the minor swing low, former minor swing low on 19th of November, and if we do the Fibo retracement of this push down from 20th of November all the way down to the low of 3rd of December, that also corresponds closely to the golden ratio as well, 61.8%. All right, so that's for the dollar yen. So flipping to a neutrality stance for today between 151.90 slash 152.15. Lower limit is 150.70. All right, so that's conclude the intraday technical outlook on the major dollar pair. So let us now turn our focus to the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 right now managed to stage that pullback and hover right above the short-term pivotal support level at 20,150. Okay, 20,150. Okay, let me reject. So today intraday price movement got rejected over here. Okay, so there's a rejection at this level. Okay, so given the fact that it got rejected over here, yes, it's still holding above that 20,150 short-term pivotal support level. To increase the conviction of, plus it's also testing the 50-day moving average as well. That is acting as a support. So to increase the conviction of this minor bullish reversal that could take shape on the Hong Kong 33, given the fact that it's now testing the 50-day moving average after that previously that push up, then we see the pullback that take shape yesterday. Storing right exactly at the 20,000, slightly above the 20,150 short-term pivotal support level. I will add a potential upside trigger level at 20,520 level. So only a clear breakout with an hourly close above 20,520 will increase the odds of the intraday bullish bias on the Hong Kong 33 to potentially in the next step to revisit or to expose the next intermediate resistance level at 21,350 next. All right, but on the intraday basis, there could be another resistance that taking shape here, which is 20,820. Okay, so there's these three levels to watch for today. Okay, 20,520 followed by 20,820 and thereafter 21,350. That was being the inverted V shape, right, on Tuesday US session. But however, a price session have an hourly close below 20,150. Today's intraday bullish bias will be invalidated to see another round of choppy movement. That means this push up over here is a failure or a bull trap, and a choppy movement to expose the next near-term support level at 19,940 followed by 19,690, which correspond to the swing low of 9 of December, the 20-day moving average acting as a support, and as well as the minor ascending trendline support that is still in place since 26th of November 2024 low. Right, so that is the key level to watch out for the Hong Kong 33. Still maintaining the intraday bullish bias, but conviction will only increase upon the hourly close above and the breakout of 20,520. Right, so now back to the Japan 225 or the Nikkei 225. So still no change, continues to be trapped inside. Upside can't break above the minor descending trend line that is still in place since the high of 5th of December, which is the upper neutrality limit at 39,948, still holding above the 20-day, the 50-day and the 200-day moving average, which is the lower limit of the neutrality range at 38,830/670. So still maintain the neutrality stance of the for the K225, i.e. the Japan 225 between 39,480 and 38,830/38,670. All right. Now, turning our attention will be the German 30 or the German DAX. So the German DAX continues to hover sideways yesterday, shaping a lower high over here. So the RSI continues to remain lackluster, tracing out a lower high as well, okay, before inching downwards below the 50 level mark, indicating the lack of upside momentum. Okay, so what I will do over here is that for today, I will tie up the levels for a while. So no change for the short-term pivotal resistance level, still maintaining at 20,470. And with that, we will still maintain that intraday bearish bias. But the first support level to watch will be yesterday's low over here at 20,260 level. All right, 20,260 level. A breakdown below 20,260 level may see further potential weakness, exposing the next intermediate support levels to watch will be at 20,155, followed by 20,010 next. Only a push up with an hourly close above 20,470 will invalidate today's intraday bearish bias to see the continuation of the impulsive up move sequence. We in is short and medium term uptrend phase that is still intact because price action is still going to hold above the 20 and the 50-day moving average to expose the next intermediate resistance level at 20,640, 650, and even 20,845 as defined by a Fibo extension cluster levels. Okay, Now, turning our attention will be the major US stock indices, starting with the Wall Street 30 that continues to remain weak. So yesterday we flipped to a intraday bearish bias. So price action starts to actually break down below the 20-day moving average. So with that, it got rejected at our first resistance yesterday. So this first resistance will turn into a pullback short-term pivotal resistance for today, given the failure to hold above the 20-day moving average as we are speaking now. So using a tightened key short-term pivotal resistance level at 44,520 on the US Wall Street 30, i.e. the Dow Jones Industrial Average, we will maintain that intraday bearish bias for the potential mean reversion decline scenario to continue to play out. Next near-term support level to watch on the intraday basis will be 43,980/807. All right. However, only an hourly close and a push-up above 44,520 will negate today's intraday bearish bias to see a minor recovery, revisiting 44,740. Above it sees the current all-time high area at 45,070. All right, so now what's next for the Nasdaq 100? So Nasdaq 100 yesterday's managed to stage a push up, hit our first resistance, exactly our first resistance level, 21,536. Can't break out further and plummet lower to test our first support level at 21,400. Since you haven't break below 21,400, I do not want to use 21,536 as my short-term pivotal resistance level. So still use yesterday's 21,650 short-term pivotal resistance level as my resistance make or break level to maintain the intraday bearish bias on the Nasdaq 100. A breakdown below 21,400 exposes the next near-term support level at 21,220/21,100, which correspond to the lower limit of this minor ascending channel that is still in place since the minor swing low of 20th of November. Only a push-up and an hourly close above 21,650 will invalidate today's intraday bearish bias to kickstart another round of impulsive upmove sequence on the Nasdaq 100 to test the next intermediate resistance level at 21,770. Next, above it sees 21,950/22,036. Okay, so that sum up the intraday technical outlook on the major stock indices. So now let us turn our focus now to the commodities market, starting with gold XAU/USD. So for gold XAU/USD, it almost hit our second resistance zone at 2,728/2,715 level, okay, and surpass the first resistance level at 2,689. All right, over here. Okay, so this should be a pullback with support level now. Okay, so now the hourly RSI has really hit the overbought level over here, hit overbought level, but there is no bearish divergence as price action continue to shape higher high in line with the price action yesterday, okay, the last higher high. Right, so with that, because being at the overbought level, there could be risk of a minor pullback taking shape at this juncture. So minor pullback support level to watch will be at 2,689, and the key short-term pivotal support level that may hold in a maximum extension of the minor pullback potentially will be at 2,674, which also correspond very closely to the 50-day moving average. I think that's soon to be acting as a support at 2,674 as well. And if we were to do the Fibo retracement of this push up here after the test of the 20-day moving average, it also coincides very closely to a 38.2% corrective minor wave fall target as well. So with that, as long as this minor pullback didn't surpass below 2,674, we will still maintain that intraday bullish bias on gold XAU/USD. First resistance to watch on the intraday basis will be 2,728/2,715. Above it sees the next resistance coming in at 2,750, which is the minor swing high area of 5th of November and 6th of November, and also correspond to the 0.764 Fibo extension level drawn from the low of 14th of November, push it up to the low of 6th of November. Right, so that's for gold XAU/USD. Only an hourly close below 2,674 will invalidate today's intraday bullish bias to see another round of choppy movement, reintegrating back below the bottom of this sideways range configuration again, exposing the next support level to watch out for will be at 2,652, followed by 2,631, which correspond to the rising 20-day moving average. Right. That's for gold XAU/USD, still maintaining that intraday bullish bias with a tightened key short-term pivotal support for today at 2,674. All right, so lastly, turning our attention will be the West Texas crude oil. So the West Texas crude oil continues to be in a bullish dynamic after that positive news flow on the potential current Biden administration that could actually impose further sanction on Russia oil. All right. So with that, we see the hourly RSI continues to actually trend upwards. All right, here holding above a parallel ascending trend line support level. So with that, given the positive momentum that is being displayed on the hourly RSI, and the hourly RSI hasn't hit the overbought region yet, so there could be still a bit of residual push up more to go on the intraday basis for the West Texas crude oil. So with that, I will have a 67.85. So this was the US late European session low yesterday at 67.85. So using 67.85 as my short-term pivotal support level on the West Texas crude oil, above 69.30 exposes the next intermediate resistance level at 70.80, which corresponds to the 50-day moving average, acting as a resistance level as well. Only a push down below 67.85 will invalidate today's intraday bullish bias to revisit 67.10. A breakdown below it exposes 65.70, which is the lower limit of the major support zone of West Texas crude oil. Right, so that sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the calendar. What are the key data to look out for other than the US CPI data, which is out later today? Right, so today's will be Wednesday over here. Okay, so it's a rather quiet US, quiet European session as well. So what we could see over here is that during the European session, there's nothing key to take note of, except when the US session kickstart, you have the core inflation rate data, which is much more important than the normal headline inflation. So the number market is looking at is 3.3%. Okay, so this 3.3% inflation trend in US that market is penciling for November remains unchanged in almost the last 2 months. So what do I mean by that? Okay, if you look at the trend of the core CPI data. All right, so in the last September, October, it has been at 3.3% now, and market is also looking at 3.3% for today. So right now, if there is a surprise bip up to 3.4 to 3.5%, that could mean a turning point in inflationary trend of the US. That means if you look at the 5-year trend over here, if it starts to go up to 3.4 or either 3.5 today, this could be a turning point. That means a potential bullish reversal in core inflation rate trend of the US. So if that were to happen, that could spark another round of dollar strength coming into FX market. Why? Because that could potentially reduce the dovishness or future interest rate cut by the Fed in 2025. Because if you look at the CME Fed Watch 2 now, that they are looking at, so market is still looking at potentially 2 interest rate cut to come in next year, either in 19th of March or 7th of May, and thereafter or 30th of July next year. Then thereafter, the Fed will start to remain on hold after hitting 3.75% to 4%. But what if inflation data today came in higher than expected? This expectation for next year may change, and it may only show potentially 1 interest rate cut instead. So that could potentially support the ongoing bullish technical element that has been fleshed out on the US dollar index, right? That means further dollar strength going forward, and that also potentially could see higher US Treasury yield, and with lesser dovishness by the Fed coming into the picture, we may continue to see that minor corrective pullback on the major US stock indices that continues to play out as discussed earlier on the intraday technical outlook on the Nasdaq 100 and the US Wall Street 30. And other data to look out for over here is more also pertaining to the FX market for those who has interest on the Canada dollar pair or the any of the Canada crosses. FX crosses will be Bank of Canada interest rate decision that is out at 10:45 p.m. Singapore time today. Market is expecting a 50 basis point cut to bring it down to 3.25%. And thereafter at 11:30 p.m. it will be the press conference. And also at the same time, it will be the weekly US EIA weekly crude oil supply stockpile change that could also may impact the intraday movement of the WTI crude oil price. Okay, then thereafter, it will be a rather quiet session. Yeah, quiet session. And only tomorrow morning, early Asia session time, pardon me, it could in Aussie labor market key data release, which is the employment change and the unemployment rate at 8:30 a.m. Singapore time, that may impact the movement of the Aussie dollar. All right. So with that, that sum up today's daily dose of market insights. Kelvin here signing off, and I wish you guys a great day ahead. And we shall speak again tomorrow. Thank you.